I would love to hear more of your perspective on these corporate treasuries because we're seeing so many launch, and it's hard to know how they're all going to differentiate themselves, what their strategies are going to be to accumulate Bitcoin. Obviously, they're trying to grow to the level of trading volume and liquidity that MSTR has, right? What do you think about them, and is there going to be this interesting like race playing out?
Yeah, I think it'll be definitely some competitive collegiate dynamics of trying to come up with what is the perfect ideal of what a well-run treasury company strategy could look like. And competition always begets better opportunities for consumers. And so I'm excited for this moment. And I do think we're going to therefore see a flywheel of innovation come through. The thing that I'm noticing is that there is a barbell perspective about Bitcoin treasury companies. Some people are really interested and they're fascinated by it and they're embracing the movement. And then you see the other people who are just flat out opposing, aghast that's even happening, and reminds the cycle of grayscale and tries to draw parallels around why these kinds of leverage always end up badly.
Yeah, they're calling it paper Bitcoin summer. Have you heard that?
Yes. Oh man, am I familiar with those terms as someone who loves to also traffic in the options market. And the thing is, this is great. This is great news. This is really great news that there's such opinions because I've always shared the view that the most dramatic price action happens when these two forces collide. You need a lot of short interest that can be also then taken to the other side in ways where thesis can be proven or disproven. And that's what creates volatility. And volatility is ultimately a thing that retail investors really embrace in this opportunity of hyper-financialization. And so I would be more worried if everyone was aligned on the same trade, kind of actually like Grayscale. No one thought Grayscale would blow up. It was kind of one of those, everyone was touching it as if it was going to be the greatest arbitrage on earth, and they couldn't imagine how it would blow up, and everyone piled in on it. Not a lot of people raised their hands. Here, at least, there's an active dialogue. And I think that in itself is a pretty worthwhile thing. At the end of the day, financial engineering is one path of how to bring more Bitcoin per share, which is the predominant financial metric that investors are interested in. But really, the most intuitive way to think about increasing Bitcoin per share is actually just be more productive with your assets to get more Bitcoin per share. I think that is really intuitive, which is if you have a profitable operating business or you're able to actually do things with Bitcoin to generate yield and cash flow, and you then buy more Bitcoin with it, then you're getting more Bitcoin on a denominated dollar basis, which is good for investors. So I think we're going to start seeing a transition into some of those stories in a more authentic way. And people will be able to really open their eyes and see, oh yeah, this isn't just like financial alchemy. This actually is productivity being captured in an operating company wrapper that's not possible in the ETF wrapper.